All right, this is Jeff Scott, and welcome everybody to this week's rendition of my top-down review. It is approximately 10 a.m. on Sunday, September 13th. Futures thus are not available. I've entitled this week's review similar to a name of one of my favorite Brad Paisley songs, Waiting on a Woman. And those that follow the markets know that this is a special woman, Janet Yellen, who I believe at 2 p.m. Thursday will let us know whether or not she will finally start to raise rates. I think you may see markets having some, I would have thought, quiet days the beginning of this week because of waiting for this to come out. Remember, Rosh Hashanah, the first of the Jewish high holidays, starts tonight. So it is a two-day holiday for very observant Jews. So that means that it will run through sundown on Tuesday. So Monday and Tuesday will be could be low volume days. So low volume sometimes equals high volatility. So much to be said about the Fed, much depending upon the Fed, or is it already priced in? Disclaimer, as always, this is for educational purposes only. Any recommendations on the spirit of education should not be considered investment advice. I'm a doctor, not a broker. I am truly independent. As it says, I am not affiliated with any of the vendors or trading companies that I mention in this video. I have paid for all the tools that I use, and no one pays me to say good or bad things. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I always start with my wall. I've been doing this for so long, I probably shouldn't spend any time with this, but let's just say that I built my foundation in canceling based upon the work of O'Neill, as improved by Morales and Katcher and Woodward and Brown. I've supplemented it with things from learnings from Alexander Elder and Van Tharp on position sizing. And then I really turbocharged it with my relationship with John Person, his books, his indicators, his mentoring. Teach me not only what's the right stock to buy, as I might learn with canceling, but when to buy it, when to sell it, how much to buy, and how to manage the trade. What I need on my desert isle, besides high-speed internet, is I need a real-time platform. I use a number of them. TradeStation and Thinkorswim have pros and cons. I usually have both open as well as Genesis. From an analytic perspective, nothing beats HGSI, which is why it's the program that I'll use most of this program. EdgeRater is a perfect complement to it. I do use a number of seasonality tools when time allows and have a number of favorite websites. So Friday ended a very strong day. Interesting week. As we'll see, we traded very high on Monday before giving back some. Tuesday was a tough day for many. And then the rest of the week seemed to be trying to get back towards Monday's highs. Much of the gains, frankly, were made between the close Friday and the open on Monday. As you could see, though, we did close Friday strong. And as we look through my list of sectors as provided through John's package, one could see that there are lots of areas of strength. Continued strength with home builders. One of the themes from my review this week was a lot of companies that helped home builders, whether it was carpeting, whether it was wood paneling, whether it is electrical, seem to also be benefiting for the strength at home builders. Energy maintains weakness as Goldman Sachs came out with a pretty strong call, calling for a potential $20 oil. Financials mixed. I did see on my regional, on my weekend review, that there was some strength in regionals, although you can't really see it here. Much of this will be tied to the decision. Insurers mimic financials. Industrials and technology demonstrating strength. Frankly, everything was strong. Even some of the trains haven't been strong since oil rolled over. So we ended Friday on a high note. Now, here's my markets, my E-minis, my Nasdaq, my YMs, my TFs, my VIX, and my dollar. This is one of the screens that I watched during the day. And you can notice that we've had death crosses across the board on the major indexes, that all of them have the basic same pattern of a big pullback and now sort of a wedge. In fact, maybe the apex, and we'll come back to this later, of that wedge may break with the Fed announcement on Thursday, may break up, may break down. All of these could be considered bear flags, yet how can I differentiate at this point between bear flags or the beginning of a recovery? And I think a lot will depend on which way they break. But when I can't tell, all I can tell you is that we're wedging. Because it's a bear flag, there's a good chance that wedge breaks to the downside. But I think that that risk is somewhat balanced going into Thursday. Bulls versus bears, speaking of balance, this again are my major indexes, the E's, the NQs, the TFs, the YMs, and the NYSE. I have a 5-minute, a daily, and then a weekly, and you can see across the board on the daily charts, we are in a daily person buy signal, while in the weeklies we are across the board in a weekly sell signal. So again, part of the shootout here at the OK Corral between bulls and bears with some mixed signals. Now, I called this a false breakout. It's more of a trend line break than a breakout. But notice during the week we opened up here where my arrowhead is on interest rates, traded all the way up, failed at the 17-day, and closed close to where we opened. So does that failed break of the trend line of the interest rates foretell that the Fed may not be raising rates? I don't know. But I do know that falling rates were good for REITs. REITs were strong this week. MLPs, utilities, dividend payers, and home builders. And rising rates are good for regional banks and insurers. Frankly, as I looked at the end stocks, I would say it was a mixed picture. So I think a lot of eyes are on the Fed, and we are still above this rising trend line. From my Lowry indicators, I really like this buying power and selling pressure. And whenever selling pressure stays above buying power, that's not a good sign of the market, and it's sort of going sideways. And the AD lines have rolled over, as we've talked about and will continue to talk about. If you look at the AD line, whether it's on the weekly, on the left, or on the daily, we've now got death crosses on both. And if this was a stock, this is not a stock that you'd want to buy. In fact, if we drew trend lines in here, we probably have a retracement in the downtrend and not necessarily a recovery. But we'll see if that bounce can take out that trend line and work its way back up with improvement in the AD line on the daily. From a participation perspective, this white line represents a long-term trend line going back many, many more years, where the number of stocks above the 200-day moving average would drop prior to the market rebounding. We've started to rebound. We're now getting back to that line in the sand here, and that would be perhaps positive for the bulls, that we might be expecting a further recovery here. On the other hand, it hasn't broken above this trend line. If I look at stocks above the 40-day SMA, here I've overlaid the S&P 500, and you'll notice that on these breaks, to the downside, is when we've had pullbacks in the market. Now, we've come off the bottom. We did go to a multi-year low. We got to about 5% of stocks above their 40-day moving average before this market bounced. And we'll be watching to see if that's foretelling an improvement in the market. Canaries in the coal mine, these are some of the major market leaders over the last couple of years. I use them to give me a sense, perhaps a leading indicator what the market will do. And probably led by Google, Amazon, Facebook's improved some as well. Netflix is struggling. Apple's turned around a little bit. Tesla's doing okay. We're getting back to try and retake the 50-day moving average on the Canaries. Market thoughts. Short term, we've got bear wedges on major indexes or bear flags. Many individual stocks remain in bear territory. Fed meets this week. The wedges may remain until the Fed reports. And I did see strength on my bottoms up on building suppliers, builders, REITs, biotechs, pharmas. And remember the Jewish high holidays. First of all, Happy New Year. L'Shana Tova to all my Jewish friends. It's been so long since I had my bar mitzvah, I can't even remember all the words, which is shameful, so I shouldn't admit that publicly. But Jewish New Year's are Monday and Tuesday. Next week will be Yom Kippur, which is our Day of Atonement. which is the holiest day in our year. So again, one might expect some volatility with low volume on several of the days when a lot of the Jewish traders will be out of the market. Longer term, topping action continues. Slowing worldwide economy versus full employment in the U.S. puts the Fed on the hot seat. To me, this recovery's felt a lot like October 2011. It took months to get back to the prior highs. Corrections do not mean a bear. Risk management remains prudent. And the question of whether we're in a bear or not may not be meaningful since so many stocks have fallen into bear territory. Now, then again, to take away this longer-term bearish thought, like the fall of 2011, perhaps even 2014, this might be just a correction, and we still may move on to new highs. And I think you have to be prepared for any possible longer-term outcome. Again, remember, stock patterns are cyclical. We've clearly moved down into this level here on the right side, the stage 4 fear. And when you move into various portions, you have to address it differently. I remain cautious, and now the question becomes, when have we bottomed and when do we go back into a markup stage? And that's going to determine which of the following techniques I do. When you could see on this slide that based upon where we are in the marketplace, and I think I mentioned this before, this should probably be down further, but where I am in the marketplace really will affect how I'm playing this market. Know your news and EPS dates. There is quite a bit of news this week, but it really is all about the Fed. It's September 17th, 2 p.m. rate decision. But there are some other pieces: industrial production, capacity, mortgages, CPI, energy inventories, housing starts, all of which can have market-leading impact and leading indicators on Friday. There was a surprise late in the week, which did cause the market to stutter, which was the consumer confidence took a big hit, and that's probably related to some of the market turbulence. As I know that when I got some of my statements from places where I have other money managers managing some of my money, and even I heard it from my wife, who was concerned that because she manages my mother-in-law's funds, that there was a 3% drop in the account. Well, that was a tough month, and I think that doesn't help consumer confidence. We're getting near the end of earnings season, but there are still some big ones here. Oracle, for one, Rite Aid stores, Adobe. So if you own any of these stocks, you need to make a decision as to hold them into earnings, protect yourself, or dump them. And as I said here, it's a judgment call to hold stocks over earnings dates. It's bad judgment not to know when your earnings date is scheduled. Chart of the week, we've had some winners, we've had some blow-ups, especially when drugs come out with a study result that's negative. But the key point, these are presented for educational purposes only. Trading, especially options, carries substantial risk of loss. I do not warrant any expectation of return, or I may or may not already have a position in the stocks presented. I plan on taking the trades that they execute so I can discuss. That doesn't mean I take big position sizes. I might buy 100 shares. I might buy 10 shares so that I'm invested enough to follow it. And I'm doing this not to provide stock tips, but to openly discuss how I take the trade, why I choose a specific stock or strategy, and where I plan on taking profits or placing stops. Last week, we talked about RXDX. I liked it because it had a new PPS weekly signal. It was in a daily PPS. It had kahunas and squeezes on my HGSI indicators. The key point to me, if the market was not in a free fall, because I won't take trades, even if they're working, if the market is in a free fall, and I gave some risk parameters. The white line here where my arrow tip is the buy signal. And you could see Tuesday we actually traded above it, but during the day we did trade down into the buy range. And if you took the buy, the green is where I had put my target, the red was my stop, and we are basically in the trade up just a few pennies. Chart of the week for this week, I liked Nuvasive. I liked Nuvasive for a number of reasons. This is an HGSI daily chart. And first thing, I start up in the upper right-hand corner. The bongos, the top one is the weekly, the bottom is a daily, both turn green on Friday. The bongo is a timing mechanism. It is not a fast timing mechanism. but it is a mechanism that really the weekly bongo can be used as an overall market buy and sell signal. It will get you in late. It'll probably get you out a little later than you might want to get out, but it will capture most of a move, and it will prevent you from getting killed, except for one-day flash crashes when it changes too late. The market's already recovering. The third box down is yellow. That's accumulation distribution. I'd rather see it to be green or deep green, but that's neutral. Then I had Elder's Force, a 13-day and a 2-day. So all of those technicals, aside from accumulation, look bullish. The next one down, this is the high jump, so I know I'm not extended. I'm nowhere near the top. This button here, where I can go back to my arrowhead, represents a buyable back gap up. And you'll notice that Friday's move pretty much came from the bottom of that buyable gap up day back here. But we did have a mobile breakout in green from a squeeze, one of my favorite setups. We had a pocket pivot and we had a kahuna. So we had a lot of bullish activity happening in Nuvasiv on Friday, and we were coming right off of the 50, so not an extended stock. You'll notice up here with these arrows that there's been a pickup in earnings per share growth, and the earnings per share growth are multiples higher than the PE range. When I drop into TradeStation, I notice that I'm in a weekly PPS buy where my arrowhead is. I'm in a daily PPS buy today. The OBV trending is turned up on both the daily and the weekly. As I mentioned, we've got a MOBO breakout, squeeze, pocket pivot, and force kahuna all firing on this stock. And you can see right here, that's the mobile breakout dot. That's the squeeze. That's the PSAR, which has already gone to positive. And that's the kahuna force. Other things here, this is the bongo, and you can see the daily and the weekly have gone positive. It's been in a monthly positive. The monthly being green tells me it's been on a longer trend, uptrend. So the way I would like to manage this is, this gray market here is from John Persons. That's the last conditional change, which was a stop signal on this sell signal here. You will notice that I'm going to take the trade if it trades above this with a buy stop at 54.35. So breaking a last conditional change would be another reason to get into this stock, but I would not take it until it breaks that. My buy stop is 54.35. My target one is 58. My stop is at 50.69. I'm risking $3.60 or 6.7%. Assume risk per trade is $2,000, and I'm going to purchase 550 shares. Tonight's agenda, after my introductory comments, we'll look at the market review, top-down analysis, and see if we can't find anything interesting to go by. Upcoming events, October 16th through 18th is Greg Mills Orange County meeting, headlined by George Lee, a strong roster of speakers, including myself. I'm not referring to myself as strong, I'm referring to David McMullen, George, and others. I will not be in PV on October 24th and 26th, but if it wasn't for a wedding of a dear friend's kid in Philadelphia, I wouldn't miss it for the world, for the Ian and Ron show. And I know Ian is getting very excited for this meeting, and I hope we have just a rousing turnout to support them. Then October 31st, I'm actually speaking down here at John Persons' meeting. I'll be a small part of a great meeting. John's just an outstanding trader, educator, teacher, everything, and he'll be speaking down here in Palm Beach Gardens for a 3-day meeting. So hope to see you in Florida, either at John's meeting in Orange County or even here next year for my meeting if I decide to continue holding them, which as we speak right now, we will be. All right, let's kill some of that stuff. Let's take a look at TradeStation. And let's go into my combined elder and person view. So as I've mentioned, I have been following Alexander Elder for a long time, And what I find on many of these folks is I find certain things that I find useful, and I take them with me whatever else I'm doing. I may use them differently than they were intended. But I'm using, the bottom line is I put together what works for me. You have to put together what works for you. So really on this workspace, there's a couple things I'm looking at. I'm looking at the color of the price bar. That's an elder impulse. Green is okay to be long or hold. Red is an okay to be short or hold. And blue, you're okay to do anything. This gives me an idea of it's sort of a filter of how he looks at a trade and whether or not he can go into a trade. The arrows are a person's buys and sells. If you see little green or red dots attached to the chart, that might be divergences. Here's my high jump. The high jump is really not going to be an issue here since all the indexes have sold off. So we start here, and the first thing that I notice is the Nasdaq is on a green, which is a buy. The weekly and monthly are blue. It's on a person buy, and clearly the Nasdaq has led the market this past week, especially some of those big Nasdaq 100 stocks. The Dow Jones Industrials, blue, blue. So red is on the monthly, which is bothersome, but at least now the weekly has now gone to a neutral signal, and John has a buy signal on the Dow, at least his indicators do. The S&P 100, similar, blue, blue, red, so not perfect because you got a weekly red, but in a buy signal on person's indicators. Semiconductors, which have been moving up nicely after selling off hard. You notice this green dot. This is MACD divergence. Now, MACD divergence doesn't mean it's going to bounce right away, but it means you need to start looking as it could be an early indicator that the market's turning. But it can go on for many days before it actually fires. Stocks is green on daily, blue and red. So you can take your pick. Clearly, strength has come in. It's got a green arrow. But whenever I start to see the monthlies red, I don't forget that perhaps the major trend, the longer-term trend, is still at risk. The cash S&P, blue, blue, and red on a buy signal by person. The E-mini should look the same. It does. The NQ100, strength, green, blue, and blue. The YMs, the Dow, green, blue, and red. And the Russells, green, blue, and red. So clearly better than it's been the last couple of weeks. A person buy on all the dailies. On the weeklies, you could see there's some blue and some red. So we still have a ways to go before we're out of the clear. But this is clearly improved. And the major ETFs, the IWM, should look like their futures. Here's the person buy in green and blue and red on the IWM. The diamonds, green, blue, and red with a person buy. And the Qs should be the strength. And you've got green, blue, blue, and on a buy signal. You notice that the only sectors that were not positive on Friday were the materials and the energy. So very quickly, XLB, blue, blue, and red, but on a buy signal. XLE is on a sell signal. Now you'll notice that the XLE on the weekly is starting to get these little red dots, but they've been going on now for a couple of months, but just telling me that some of the selling pressure may be abated. Financials, be interesting to see what rate hikes do. Weekly and monthly are red. Daily's gone to blue on a buy signal. Industrials, green, blue, and red on a buy signal. Technology, green, blue, and red. So really, the short-term signals are giving you a buy. The medium-term signals are neutral, and the long-term signals are still showing weakness. This is pretty much consistent with the market. Staples, blue, red, and red in a person buy. Utilities have been weak. You see the sell-off they had. Here's some MACD divergence suggesting reduced selling pressure on the weekly, and they popped this week with a buy signal here, and they're blue. Healthcare had sold off some, now back in a buy signal, although weekly is still red, so that would be concerning a little bit. And XLY, discretionary, green, blue, and blue is probably as strong as we're going to see. So Oh, that's last week's buy signals. That's where I sit right now. And let's go and take a look at an HGSI. Open up the warehouse view. In the selector here of what we're looking at going on to user groups, Woodward and Brown, Major Markets Plus, and let's go to the T view, which is all price and volume heavy weighting the last day. Now, if you're a stock trader, you've got to be excited when, especially a growth stock trader, when you see the Nasdaq, the Russell up at the top, gasoline volatility, oil, gold, dollar, and commodities at the bottom. So clearly this was a sea change difference from a week ago, or really from the last several weeks. Perhaps this is a notch on the more bullish camp. There were no kahunas on the major indices in the last several days, so let's just go to a clean moving average chart. So here is the S&P 500, and you know, I probably have to redraw my lines a little bit, but we've been in a wedge formation. You can see the bongo weekly has been red for some time. And as I said, it's a little late to get you in, but if you had just been using the bongo weekly as a signal, you would have been whipsawed a little bit during the sideways movement, but you would have been out of this market since somewhere around 2100, which was 150 points ago. So we've got a wedge here. Now, a few weeks ago, I drew the wedge like this. If that was what happened this week, that's very bullish, and the market would probably go up and retest the 50, which would be a big move from here. I think that reality is I'm not the world's greatest trendline person, so if I had to do this today, you know, it's somewhere in the, you know, is it this, or was that the real answer in there? I don't know what the real answer is. Regardless, I think that we're still within the wedge. It's a bear wedge. Bear wedges have a tendency to resolve to the downside, and that has to be a concern of all of us. Or are we going to break out to the upside on good news from Janet? Don't know, but I expect us to be range bound in here until the Fed comes out with the report. And it wouldn't surprise me for them to raise rates in the market to rally, because I think you'll have the pundits coming out and saying they had no choice, that perhaps what this means is the market is actually stronger than we think and the economy is stronger. I do think Janet's between a rock and a hard place because of the international implications. If I look at the Dow Jones Industrials up near the top, again, it really depends on how I'm going to draw this, but we are in a wedge formation. And again, I think this part's pretty easy. This part, not so easy. And there's a number of different ones I could be drawing. Regardless, that wedge is getting closer to a head. And again, like the last, if you went on the Dow, had sold at the worst of the day at 18,000 and about 18,000, you would be way ahead of the game had you taken that weekly bongo signal. The daily will go green in a downtrend during periods of retracement, and we're in that retracement right now. So the Dow looks a lot like the S&P, big shocker. If I look at transports really trying to get back up to that 50, led by airlines, and you've got the advantages to truckers and airlines of low-cost fuel balanced by the impact on the trains where they don't have as much work to do. If I look at utilities, utilities are going to be moving around because of interest rate concerns. They do not do well in as well in a rising interest rate environment, and they've sold off pretty hard. If I look at the Russell 2000, you know, I hate to be a broken record, and again, God knows what the right lines are to draw. I certainly do not claim to be an artist, nor do I claim to know the right trend line, but I mean, again, that one's easy. I could draw this, which doesn't look so bearish, does it? I could draw something like that, or I could be drawing, various triangles there. Regardless, I think we're in a wedge, and I'm waiting to see which way we break. Now, if you want to be the bull, we bottomed, and we're slowly making our way back. We just got a long ways to go just to get back to this falling 50. And again, the 50 breaking down through the 200 is another sign of a death cross. And let's look at the Nasdaq, the leader for the week. And you could see, again, perhaps it has broken out of this wedge. Again, it's a sloppy wedge, and I think everybody can draw it any way they want, and one certainly could be drawing it like this and saying that we're still in there. Regardless of where you want to draw them and who's better at putting trend lines on, I'm not going to take that crown. I don't care. The reality here is we are in a indecision mode with flags to the downside, waiting to see what happens at the Fed. The dollar breaking down. Interesting, because I remember months ago during the summer months, early summer, late spring, the Fed did not raise rates because they were afraid the dollar was too strong. Well, I guess the joke's on them on that one. As the dollar peaked here in March, and it's clearly, the dollar's clearly in a trend line, is in a downtrend. Again, play with numbers, play with things however you want on the drawing your own trend lines, but the dollar broke down below the 200-day moving average this week, and it was down, it looks like, almost every day. That might mean gold and silver responded. Not really. Gold still trading down on the week. And if I look at silver, looks about the same. Hard to be long gold and silver. You've got the 50-day and the 200-day. You'd have to break above to prove to me you're in an uptrend of any length. And then volatility still elevated compared to where we were down here, but coming back a lot from where we spiked. And I hope this isn't the new norm, and perhaps it's doing the same as the indexes, and we'll see. Except that would potentially be a bull flag. So it'll be interesting to see what happens with volatility this week. Next thing I'd like to look at, so just to emphasize and highlight, I'm just going to go back to my Genesis slide because I think it tells it as well as anything else. You can make the bull case. Excuse me. You can make a bear case. The bottom line is we did have a daily buy signals come in this week, pretty much across the board, but we're still in weekly sell. So are these retracements in a down market with bear flags and wedges, or are we about to break out and resume an uptrend? I think the overarching likelihood is the former, but I have to be prepared for a reversal here to the upside. If I go down to industry groups, which is number 7, and I'm going to switch it, well, we'll start with, you can see, excuse me, 1 second. As you can see, we have 173 groups here, and I want to look at just what's working now. 2-day force, I've got 55 groups to the upside. I only have 9 to the downside. Now, a lot of these downside groups, no shock or energy related. Take a look at oil exploration. Take a look at a couple of these. I mean, someday they're going to bounce. This is a chart that you would have seen earlier when I looked at my bongos, my accumulation distribution, my forces, my high jump, my Bible gap up, squeeze, and MOBOs. I looked at, and I'll talk about this in a second. I looked at kahunas down here. I looked at pocket pivots where my arrowhead is right now. I use a 200, a 50, a 17-day simple, and an 8-day exponential. Obviously, I use candlesticks. This dark gray line here is the industry group, which I'm plotting. You can see how closely ConocoPhillips mimics its industry group. The red dots and the green dots are part of Wells Wilder's PSAR reversal system. Where the E here are earnings dates and how much they earn. D are dividends. It's important, I think, if you're buying something for the dividend, to look at consistency, growth on dividends. Be careful the program doesn't drop the dividend down, even though companies may announce the dividend came out. So if Seadrill pays 21% dividend and they don't lower the dividend, but they just suspend it, then the program may still look like it pays a big dividend, even though it hasn't been paid. This window here is what I'm experimenting with. And what this window has, and ignore the colors because I'm not ready to talk about those, is I'm looking at the S&P, the strength of the relative strength of the instrument versus the S&P. And more about that in a webinar to follow, but right now I'll just close it because it's a distraction. The greens here are Eurekas, which is exuberance to the upside. On the market itself, the brown or the red would be Phoenixes, which is exuberance to the downside. So I look at ConocoPhillips. Let's bring up its earnings window. I see diminishing earnings per share growth. That's concerning. I see a dividend yield of 6.3%. That means on a $50 stock, they got to have $3 of assets, of earnings per share to pay that dividend. Not saying that that dividend's at risk, but where's that going to come from? Do they have to take more debt to pay their dividend? Or do they have to sell assets? Or are their earnings going to pick up so they can pay it out of their operating income? Well, remains to be seen, but I think that story is true on a lot of these energy plays, that if earnings do not pick up, if the price of oil does not stabilize and move higher, if they can't reduce their cost, that could put dividends at risk. So clearly in a downtrend, not much at all nice to say about Conoco. Pioneer Natural Resources, this 50-day moving average is probably a great place to think about shorting. Up here, run up to the 200 was a great shorting opportunity. You saw my squeeze with the mobile breakdown here is giving you some timing to do that. EOG Resources, again, pulled back up to the 50. If oil is truly not moving up and is moving down, this is an ice hole failure at the 50, and you might expect it to take out its prior lows. So it's going to be hard-pressed to get interest in oil exploration right now. Communication equipment, a lot of these stocks pay dividends, or some of them pay dividends. Weakness here this week. Integrated oils, freight, I think, is very much tied to moving oil around, refiners. Even tobacco, a dividend-paying defensive play, was weak this week. Let's take a look at where the strength was. When I say this week, it's really the last couple of days. If I look at a 5-day group to the downside, you could see there's 32 groups leading to the downside, and energy over the 5-day window is right up at the top. On the 5-day upside window, I've got 59, and I've got 55 to the 2-day window. The fact that I've got so many more 2 and 5-day ups really supports to me that perhaps there's some underlying strength in this market, and perhaps the charts are all beaten up, but the charts are coming off the bottom, and in aggregate that's actually making some strength here, because force is a calculation of today minus yesterday times volume, and then I take a 2 or a 13, or in the case of the 5-day exponential average. So all it takes is up moves to turn the force, even if a chart has been beaten up substantially. Looking at this, biotech, specialty pharma, large pharma, medical devices, generics, all in the top 22, life sciences, healthcare, supply chain. Healthcare certainly is a leader right now, and healthcare is one of those somewhat recession-proof industries because historically people still get sick and the government still pays the bills. REITs moved up this week. I mentioned that earlier. Telecom carriers, these are the ones that pay the dividend. I'm sorry about not as much on the communications group. Infrastructure software, probably Palo Alto and Fortinet leading there. There's the airlines and truckers benefiting from low oil. Restaurants, interestingly, perhaps people are going and eating more fast food because they're saving on their gas. Metal mining, interesting to see that in there, in large pharma. There's the banks and the insurance. Let's dive down into some of them and see if we can't find some interesting things. Biotech. On my list, there were some little ones that popped up. Let's start with Gilead. If I'm just looking at this chart and don't know anything, I see a multiple of 10, a small dividend, growth rate far above the multiple, coming off the 200. This was a pretty deep pullback of about 15, 18%. It looks like it wants to go higher. Perhaps it's going to find support in here in this 102, 105 range. Love the earnings per share rate. Gilead is tough. Wall Street does not really give it the love that it should, perhaps based upon its earnings per share growth. But it did have a lot of love going up until the approval time of Sovaldi and where it's gone sideways with competition. And I really think what the story here is, what have you done for me lately? Much of its numbers are related to their hepatitis C franchise. They own that market. That market will stay big for some time, but will there be growth? So the what have you done for me lately? There was some excitement in the market as they raised $10 billion in debt, and some people are thinking that perhaps there's an acquisition of a smaller oncology company in the near future that may have caused some of these small companies to move. So Gilead, I think, is a buy right here, but I'm not expecting a rip-roaring move. Seattle Genetics, maybe this is one of those potential acquisition candidates, moving up off the 200. Still kind of mixed up top. Don't like the earnings per share growth. I do like some of their products. Insight, this is another potential acquisition candidate. You look at the valuation of a company like this, $23 billion, certainly not based upon the currently marketed products, but they have a very nice pipeline, and you could see a lower left, upper right. In what's been a tough year, the stock has pretty much doubled since December, breaking out to all-time new highs. As one might expect, high jump showing you're starting to get extended. Biogen IDEC, the big kahuna in the biotech space, sold off hard on some revenue misses on some of their lead products. Doesn't have a whole lot of earnings growth to it, but looks like it's putting in a base. Not my favorite here. Clovis is one of mine. This is a oncology product company breaking out. Again, this is the kind of company at a $4 billion market cap that I could see Gilead purchasing. Don't have any inside information. I've been long this for a while, as are many of my friends in the oncology space. Love their platform, portfolio. They do not make money, and kind of like others like TTPH, they are subjected to either approval failures or study failures that could cause major drops. Don't know anything about Vitae, popped above the 200. Celgene is probably not an acquisition candidate, being that it has a $100 billion market cap. Celgene has been a big winner of this bull market. Here's from October of 12. I'll go back here into July of 12 when it was about $30. It's had a number of splits. It's now back up to 124, 125 as of close this week. 124. Great earnings per share growth for big time biotech. This is and remains one of my favorites, and I'm back long on this stock. If I drop down to the daily, you could see that it, like Gilead, has bounced off its 200. It'd be nice to get it above the 50 perhaps before you go in with a big position. Couple of special cases. Well, Puma has been beat up, broke above its 50. Look at all these kahunas here in a weak tape. multiple mobile breakouts out of a squeeze. This is a bottom fisher. Looks very compelling to me. Do your homework. Puma's got a market cap of 3.3 billion. Kite had a kahuna on Thursday. A lot of green up here. Looks to me like this is a stock that might be setting up to run. This is a cancer therapy company. And again, is this a potential Gilead acquisition? Intrexon was a high flyer. You know, here's buying a stock off the base at the 200-day moving average. Probably a safe place to be looking at. Did have a kahuna, but keep in mind it fell from 69 to 42, and it's just bouncing off the bottom. Another one I liked, New Link Genetics, and I think this is another potential Gilead takeout candidate. It's a cheap company with $1.5 billion product line, breaking out above the 50 here. On a kahuna, everything's green here. Mobile breakout from a squeeze. I like New Link Genetics as well. All of these biotechs have to be considered speculative. The ones that are not speculative would be the Gileads and the Celgene. REITs. You know, if this wasn't a $300 stock, this looks like a very compelling thing to buy. Nice lower left, upper right, pulled back off the 50, broke out here, had a couple pocket pivots this week, all green, 2.3% dividend. EQIX wants to go higher. It's at all-time highs. Beautiful looking chart, too expensive for me to play. Avalon Bays pulled back down here to support and wants to go higher. It's still in a downtrend, hence the red up above. Simon Property Group, similar looking pattern. Istar Financial, similar looking pattern. I think the story here is that these things have been beat up. Many of them have pulled back to multi-month support, and they had some momentum coming in this week. A lot of them pay nice dividends. They moved up to the top because they moved up the last couple of days. Specialty Pharma, another exciting place to be. ZS Pharma has a potential bid coming in, an acquisition. They make no money, don't know anything about what they do. Move from 57 to 77 on potential acquisition. I don't see this as something you can be playing unless you really have some inside information, which I don't. 1.9 billion market cap, it's already had its move. Akiba Therapeutics moved up on the speculation of takeover of ZS, pulled back to the 200, don't know anything else about it. I think there's a lot of movement here because of M&A. MRTX, another small company, moved up on speculation of potential takeover this week. However, except for the fact it's now extended, it did have kahunas, big volume coming in, broke above the 50. Everything is green here. And same thing with ACET. Something is going on these specialty pharma companies. Don't know if it's all M&A. This is one that actually makes money, has nice earnings per share growth coming in above its multiple, has a PE of, a market cap of less than $1 billion. You know, this one's interesting to me. I don't know anything about ACET except it's broke out of a downtrend here. Had a buyable gap up. Everything is green in a kahuna. Don't know why I didn't pick this one up. There must be a reason. Average volume is only 181,000 shares. Enough said. Too small volume, but this is one that looks very interesting. Maybe it's going to have enough volume to be viable in the future. Back. Telecom carriers, these will have some of these will have big dividends. Here is one that doesn't. PTEK looks like it was been an acquisition, so I right-click. More info from Web. Let's look at FinViz. Either earnings were great or it's an acquisition. And we look down here, and it is sale of company to Cirrus Capital going private. Straight Path Communications, no dividend. Don't know the story here. Big move this week, 22 to 40. You know, that looks like it's also potentially an acquisition. Nope, that's all on, no, it's not on numbers. Financial results. Don't know why this one's moving, but obviously a big move, probably too late. So how could you have found it down here? Mobile breakout from a squeeze. Could have found it here, coming out of the squeeze as well. Multiple kahunas, volume picking up. You would never have looked at it. The volume is too low, 163,000 shares. Verizon, you know, sideways pattern, which is better than the market. Therefore, when I look at the relative strength compared to the market, it's actually trading a little bit higher than the market is. But what you got to like about Verizon, pays a 4.8% dividend. Infrastructure result, Palo Alto Networks. You can see a Bible gap up, mobile breakout from a squeeze on earnings on Thursday at the 50. Let's put this on a weekly because I think this chart's a beautiful chart. Huge uptrend, pull back to 50 weekly support, moving back up again. Palo Alto Networks has been the strength of a group. Looks very interesting. Oracle, deep pullback here. Not much to say here. And Microsoft pullback as well. It's really about Palo Alto Network. And the other one that has looked good in this group has been Fortinet. Pull back to support. Give me some momentum. Give me a kahuna. I might be interested in there. Airlines, beneficiaries of low fuel. American going sideways. Look, I'd like to see some momentum before I got excited. JetBlue, this was a strong consideration of chart of the week. Certainly a lower left, upper right, keeps going higher. It's got great earnings per share growth, 5-6 times its multiple. Doesn't pay a dividend. Clearly a leader, probably still buyable. Delta wants to get higher. It's got to get above 48 probably to excite me. Southwest, I'd like to see it above the 200. Alaska's look good. Not as strong as JetBlue, but a leader. And then the other one, Hawaii Air, has some big earnings coming in. As you could see here, 4 times its multiple. But like Delta, I'd like to see it get above that point here, which is 26. Airlines, though, especially JetBlue, look great. Truckers. There was an acquisition in this group for Conway. That's probably lifting the whole group. But they could potentially benefit as well from low fuel. J.B. Hunt. They all look like they've been in downtrends. Probably not a whole lot of interest here. All right. Restaurants, as I mentioned, they probably benefit from low fuel. Shake Shack really had a big move this week, but it only got up to the 50. And I'd like to see it break above this before I get excited. Look at the multiple. The growth rate's pretty high, but boy, that multiple is scary. McDonald's, really sideways, but pays a 3.5% dividend. Starbucks, interesting looking chart. Again, one that I toyed with for chart of the week. I mean, if you're a long-term bull on Starbucks, this is probably a great chance to be buying it at support at the 50. It's been such a long run up. Here's the weekly. Really looks like it's setting up to run again. So Starbucks looks interesting in this group. CMG pullback, looks like it's setting up for a run. not quite in a squeeze yet. And then number 10 in this list, precious metals. Again, gold under major pressure. A little bit of a bounce on Newmont this week, but volume on this stock is huge. Volume is a part of force. Bearish, these just look like they're bouncing on the bottom. Hard for me to get very excited about any of the gold stocks. So really the strength looks to me like in healthcare. Now I mentioned some of the building support stocks. Let's go into my the list of stocks that I created when I went through the market of stocks that interested me. Many of these we've already seen. We'll start, we're at about 57 minutes. I'm going to go through these and then look at a couple of my person signals and then say goodbye. Kroger's broke out on earnings. It had been sideways, got to the 50, had a Bible gap up, pocket pivots, kahunas. This might be an interesting thing to be looking at here. Restoration Hardware is a expensive retailer. I think they had gone private and came back out public. And in a beautiful uptrend on the weekly chart, they just knocked their earnings out of the park today. And you could see a Bible gap up, mobile breakout, breaking above the 50-day moving average. Gilead Sciences, we mentioned already. Amazon being classic gap and crap here, major move up on earnings. Pull back to the 50, which is held. Looks like it wants to go higher. One of this CMG, even Google, look like they want to leave these big caps. Palo Alto we looked at already. Facebook, another one, pull back hard on the flash crash. Hard to believe somebody bought Facebook at 72. That also means somebody sold Facebook at 72. They're not happy. Back up above 90. Looks like it would like to go higher. Google, again, like CMG, like Amazon, pulling back to the 50. Really, this is one of my get on a plane trades. A break above this PSA dot could lead to another uptrend. Avago Technologies, a semiconductor stock, pull back hard, broke below the 200-day moving average. Now is broken above the 50. Looks to me like it is setting up to go higher. Starbucks we looked at. American Airlines, I'd like to see some momentum. Cardinal Health, McKesson, and ABC all look to be moving up. And when I looked at the industry groups, hold on a sec. They are in the supply chain side. They like charge a toll on healthcare where they make a very small margin, maybe 1-2%. But everything for drugs and medical supplies goes through one of the big three for the most part. So in a steady downtrend since May is something different here. A couple kahunas in a row, broke above the 50. This is what I want to see the chart do. Break above the 50, then break above the 200, resume an uptrend. I'm long Cardinal. That they bought my last company. I still have a lot of their shares. ABC is their competitor, similar pattern. Also very bullish, and there's PPS signals galore here. O'Reilly Automotive. Automotive stocks, I think they just don't split. They are expensive automotive parts. PSAR breakout, pocket pivots, big uptrend, looks like it wants to go higher. JetBlue we looked at, Delta we looked at, Chipotle we looked at. Mohawk, this is one of the, I put in the building support. They make carpeting among other things. Nice uptrend going sideways. Here looks like it wants to break out and go higher again. DH Horton and LGI were my favorite home builders. I'm long DHI, and you could see it's all green, kind of mobile breakout from a squeeze this week. Really trying to get back to its all-time highs or recent highs. Molina Healthcare has been a pick several times over the last couple of months. Looks like it wants to go again. This week it had a big day here with a mobile breakout, kahunas and pocket pivots off of the 50 and a new uptrend. That would have been on Tuesday since Monday the market was closed. Hologic is a medical supply stock, medical equipment stock. Looks like it wants to go sitting on the 50. I'd like to see it break above before I jump in. Tractor Supply, a big retailer, especially in smaller farming communities, pulling back to the 200. It got clobbered on flash crash day, down also to the level in the 70s, back getting close to 90. Might be something to put on a watch list to see if it moves up from here. Quintillis is one of the healthcare outsourcing companies. They do a lot of different things, including clinical trials, breaking above the 50 after a pullback. Lennox, they do some of the electrical equipment and commercial residential building. Again, this is a sector that's strong. Looks like it wants to go higher. Had a kahuna on Friday. We mentioned New Link. Chimerix is another biotech stock. Pull back to support here. Break above the 50 with a kahuna and a mobile breakout from a squeeze, and everything is green. And this was one of my, on the person signals, CMRX. This was one of the ones that I liked as well. Let me see if I can find what I want. All right, let me just create that. Let's go into you can see it had a person buy signal come on Friday. Let me get it into, all right, this will be better. Here you can see a person buy, OBV going up, bongos are all green, a squeeze, a mobile breakup, PSAR reversal, and a forced kahuna. So a lot to like on CMRX. Nuvasive, the stock of the week. Uptrend, mobile breakup from a squeeze, everything is green, kahunas and pocket pivots. LGI Homes is another home builder near all-time highs, great earnings per share growth. EPAM is a technology play. It's been going sideways, broke above the 50 with a couple of pocket pivots this week after a kahuna. Total System Services, specialty finance, small dividend, PSAR reversal. Looks like it wants to go higher. Century Communities, ignore, the volume is too low. Installed Building Products. This almost was my buy of the week. IBP, all green here, and a kahuna, OBV trending up. Take a look at it in my person charts, and you can see it's had a weekly buy signal. It's in a daily buy. OBV's off the charts. Everything's a bongo. The reason why I didn't take it is I thought the volume might be too light for many of us. Apogee, they make non-wood building materials for construction. Looks like it wants to run higher as well. Don't know anything about TWOU, another technology stock. Nice uptrend, sideways. Kahunas, pocket pivots, mobile breakout from a squeeze. This wants to go higher. It's not a big earnings story. MI Homes, another low volume stock. Home builder, looks like it wants to go higher. Builders First Source, same story of a, there's a home product store. They support a lot of the building materials. Bible Gap up sideways, multiple pocket pivots this week. Looks like it wants to go higher. Great earnings per share growth, has a high multiple. Ethan Allen Interiors, another stock. You know, doesn't look great there, but if I do this, looks pretty good. Nice uptrend, sitting right below the PSAR dot. Let's go look at this in person. This was another consideration of the stock of the week. Let's see why I didn't take it. I think I didn't take it because the OBV is below the trend line. That said, a buy signal daily in a weekly buy signal. Bongos are green. It's kind of a loose chart, but I like this one a lot, especially because I could set a buy stop right above that PSAR dot. My stop could be below the low of the day, risking about 4%, 3 to 4%. Had the kahunas mobile breakout from a squeeze. I like Ethan Allen. Here's another low volume stock, so I'm not even going to talk about it. This is I believe they provide staffing services. AHS uptrend sideways. Looks like it wants to go higher. Flamel is another biotech that has earnings coming in. This is kind of the time I like to buy them. I think the stock is starting its move out of a squeeze here. Be nice to see some momentum. And that was the ones I looked at my buy list. I took my buy list, I filtered them, and I came up with what I call my filtered buy list. So let me just take this, stick this into persons, and then say goodbye. All right, so TWOU, notice all the green down here, OBV heading up in a daily and weekly buy signal, huge uptrend. This looks interesting. I mentioned all these earlier. AVGO, high close doji on Friday in an uptrend. Weekly went to a buy signal, OBV turning up, looks attractive. CMRX we looked at already in a buy signal. EPAM, technology play, weekly buy, daily buy, OBV breaking above its moving average. All these looked interesting. Ethan Allen I looked at already. Flamel, which is that biotech now starting to have earnings coming in on a new weekly buy signal. This was the IBP. I passed on it because of volume, but a buy signal daily this week, a weekly buy signal. Technicals down here look good. OBV looks remarkably strong. NCI, which one was this? Oh, Navigator Consulting. I think volumes, is volume bad on this one? I can't remember what the problem was here. Yeah, volume's not that bad. Navigant Consulting had a daily buy in a weekly buy. OBV looks good. I'd like to see the PSA reversal before I jumped in. Nuvasiv is a stock of the week. Person daily buy, weekly buy, OBV going up, strong fund technicals, and Restoration Hardware. These are some of the stocks that I looked at in both Person and HGSI. I hope you have a great week. Lashana Tova to my Jewish comrades in arms. Happy New Year, and we'll see you all next week. Thanks, everybody.